Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Thursday, February 21st, 2013. All right, let's see what the S&P futures have been doing the last few days, the E-mini futures. This is a continuous contract that we're looking at. And if you've been paying attention to any of the videos that I've been doing for the last 3 months, you can see that even though this has been going, I've been saying that even though this has been going up, that you have to be cautious because wave number one, T1, is going down. Now for the first time, T2 is going down, and T3 is going down very slightly, and T4 is still basically going about the same. T5 is shrinking just a little bit. So what happened up here was that in one day, I think the S&Ps were down 17 points or 18 points, if I remember correctly. We took out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days. Almost 11 trading days. Let me see. That closed down here. Okay, 11 trading days. So I've been warning you that this is a distinct possibility that we could just come down and hit the 21, and in a really bad scenario, we could come down and hit the 55 exponential moving average. And this would still be in an uptrend, because if you look at this line going all the way back to November, we draw a line right here, this can actually come all the way down to the 144 exponential moving average right here at 1434 and still be in an uptrend. And not only that, it can happen very quickly. So let's move this over. And let's see first what the 21 has been doing. The 21 caved in. This is a 21-minute chart on cash prices during the day. And this was going kind of sideways to down. It already had given up from 1527 down to the 89 period exponential moving average. It already given up 7 points. But conservatively, you use the 21 minute for a conservative play. It went down 7 points, came back up about 3, and right about in here, when it crashed into the 8 period moving average at around about 1220. So right in this area, and I will draw you an arrow so you can see it really clearly. Right here. So the price was 1522, and look where it ended up, 1507. So one of the things about these waves is that 1 rolls into 2, rolls into 3, 4, and although 5 isn't below 0, it sure looks like it's going to head that way. And this is definitely a longer wave. So it's still up, but you can see from the mark here at 1217 at the close, it's below anything that you can see on this screen, and that goes back to the beginning of the year. In fact, it goes back to it does go back right to the beginning of the year. So we could see a pretty healthy move to the downside here. Right now, I think we're going to see a little bit of a bounce here, just because it was so horrendous today. And if you're lucky, you'll see a move back up to 1512. So if you are a day trader, I use the 1597 because it's been very active. This move down, the 21 minute moved down at 12:30, but you can see by these waves on the 1597 tick chart that this is kind of like a hodgepodge in here, so I don't follow that. That's kind of like a hodgepodge in here, don't follow that. But this is starting to look really clear right here, and this is very clear. And that's what you're looking for, a clear distinction. Right here and right here. So the distinction of when you take the waves when it's really clear to the downside, not when it's just like slightly above, slightly below, or kind of like jagged. So right here is, let's remark that here. Okay, right here it is right at 8:30, right at the beginning of opening of trade. And if you just kept that and kept following T4 all the way down, you would still be in the trade, and you'd be fine. So you would have captured the entire thing today. All right, let's take a look at gold. All right, if you've been following me in gold, you know that I got it. You know that I recommended gold, a sell in gold right about 1656. But out of respect for the private clients that I have, I did not give you a target. So this is what happened. What actually happened, now that it's already happened, I can tell you that my target was 1557, and it hit it at mid. Let me see, 1557. It hit it about. It hit it about 3 hours ago. So right now it's 1 o'clock in the morning on Thursday Central Time, and it hit it about 3 hours ago. Now, whether it bounces up or not, that's something that remains to be seen. I have my own ideas about that, but again, in respect for the private clients that I have, I'm not giving a call. I'm not giving fresh calls on gold. That's something that you have to call, email me about, and we can set up an account. So that's all I have for you. Good luck trading, and I will see you at the next update. I did want to show you one more thing, that the sell that the waves gave off on Apple was back on the 21-minute chart, was back on 213, which was about a week ago, at 468, and it's right now 448, and it does look like the T4 right here is just about to go below zero on the 21. You can see right here, and all of these are below zero already, and on the left hand chart these are all below zero, the biggest one being T5 right here on a daily chart, and that's very, very negative for Apple. And if you remember, we had a sell on Apple way back here at 670, I think it was like 670, 680, and it was just a terrific, terrific ride for those of you who've been following me. So right now, I will tell you that since the 8 period, exponential moving average has been below. Let me expand this a little bit so we can see this. Since the 8 period moving average has been below the 21 since December, this is continuously going down. It didn't breach it, it's still below, and it had, even when the stock came up from 445 up to 484, the 8 stayed below the 21, and the 8 actually crossed the, let me see, that's the 610 exponential moving average. It crossed it, came back up above, and now it's crossing it again. This is a death spiral for Apple. Okay, one of the things you should know is with gold being down, Apple being down, this is not a good sign for the stock market. This is like a telltale sign of what's really going on. And especially, let me pull up the VIX and show you what happened to the VIX today. On a 21-minute chart, look at the VIX. I mean, what I've been trying to tell you for days is, it's not a good chart. Let me get my circles right. Okay, for days I've been telling you that any kind of fear in this market is going to spike the VIX and drop the market like a rock. Look at that. It was up 2.37 today. I haven't done the math on that, but that's like 20%. That seems like a 20% move. So the fear is back in the market. Hold on to your hats. If you have puts, that's fantastic. Wait for a little bounce up on the, I think we ought to get a bounce on the S&Ps here. This is a 21-minute chart. If, with any luck, we should get a bounce back up to about 1512, 1513. And right now, after market, it's up, it's only up 0.25. So, okay, that's all I have, and I will see you at the next update. For those of you who don't know, I'm now doing gold and silver, and I follow it very closely all day long. It's been my new niche, and I do it for private clients. If you want to get in touch with me, email me at tritonwaveguide.com, and I will be happy to talk to you, communicate with you about fees and services. Thank you and good night.